Hello friends, today we are in class 2 CMA part 1, and today we'll continue from the last topic. Last class we discussed about the cost measurement, and we continue that class today as well. And last class we had discussed about cost measurement and why cost measurement, and classification of cost, product cost and period cost. We discuss product cost, especially that is directly related to the direct cost, and direct cost means direct labor, direct material, that is normally called the product cost. And period cost, we discuss about the admin expenses, selling and distribution expenses, all these expenses we discuss about the period cost. And also indirect cost we discuss as the period cost. And activity based cost we discuss semi-fixed cost, semi-variable, variable, right? Fixed cost we discuss. And now we will discuss about the absorption costing and variable costing. Okay. Today we discuss about the absorption costing and variable costing. Okay. And absorption costing and variable costing. First of all, short definition. What is the absorption costing? Absorption costing, also called as full cost system, right, include fixed cost and variable cost, and manufacturing cost in inventory. Okay. And I just show you the definition detail absorption costing. Fixed cost, variable cost, mixed cost, we already discussed this one. Cost behavior we discussed already. And I just show you the absorption costing here. Standard costing, normal costing, and actual costing. Standard costing, normal costing, and actual costing. If we already discussed, that's fine. If we have not discussed, then it's just I summarize the what is the standard cost. Standard costing means that is also called budgeted costing. Okay. Standard costing we measure on the basis of standard rate and standard quantity. And normal costing we take direct labor actual and direct overhead, or the direct overhead, that is direct material actual cost basis, and overhead, factory overhead will manufacturing overhead will be on the base of applied overhead rate method. Okay. And actual cost, everything in actual basis, all the actual rate is simple, and just that was revised. See, standard costing, cost accumulation method, usually with the process costing or job order costing. Okay, direct material, direct labor, application rate, standard rate, and direct material, direct labor, application base, standard amount allowed for actual production. Okay, and overhead application rate, standard rate, right? Overhead application rate, standard rate, overhead application base, standard amount of allocation base allowed for actual production. Normal costing, job order costing, that is cost accumulation method, and normal costing, that direct material, direct labor, already I discussed that, actual rate basis, and direct material, direct labor, application base, actual amount used for the production. Okay, and overhead application means manufacturing overhead, estimated normalized rate, estimated means standard rate, and overhead of allocation base, actual amount of allocation base used for actual production. Okay, and actual costing means job order costing, that actual rate, and direct material, that rate actual, base actual, and overhead actual, everything will be the actual rate basic, right? This is short revision, and now we are going for the absorption costing and variable costing. Okay, this is the variable costing and absorption costing. Variable costing and absorption costing are two different methods of inventory costing. Under both variable and absorption costing, all variable manufacturing costs, both direct and indirect, are inventoriable cost. And under both variable and absorption costing, all variable manufacturing costs, both direct and inventory costing, and only two difference between the two methods are their treatment of fixed manufacturing overhead. Especially the difference between variable cost and absorption costing is only the fixed manufacturing cost overhead treatment method. Okay, income statement presentation of the different costs. Then all the costs except fixed in factory overhead are treated as same manner under both variable and absorption costing, although they may be reported in slightly different manner on the income statement. Variable costing can be only internally for the decision making. Variable costing is not acceptable under generally accepted accounting principle for external financial reporting. It is also not acceptable under US tax regulation for income tax reporting. It means variable costing method is only for internal use only. Okay, and this is not used for the external financial reporting. For external financial reporting purpose, we have to prepare on the basis of absorption costing. Absorption costing means total costing, fixed overhead also we need to consider. Okay, fixed factory overhead under absorption costing. For the manufacturing company, absorption costing is required for the external financial reporting by generally accepted accounting principle. Under absorption costing, fixed factory overhead costs are allocated to the units produced during the period according to the predetermined rate. Fixed manufacturing overhead is therefore product cost. Under the absorption sold, The predetermined mix overhead rate is calculated as follows. Budgeted monetary amount of fixed manufacturing overhead divided by budgeted activity level of allocation base. This is the fixed overhead rate calculation formula. Okay, the budgeted activity level of allocated base is the number of budgeted direct labor hours, direct labor cost, material cost, or machine hour, whatever is being used as allocation base. When standard costing is being used, the fixed overhead is applied to the unit produced on the basis of number of unit of allocation base allowed for the actual output. For example, fixed overhead is applied to produce unit